Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock with news of an Aussie tax cut that has flown under the radar. But first, in the US, retail sales unexpectedly fell in April as households cut back on a purchase of cars and a range of other goods, pointing to a slowdown in economic growth. In addition to weak retail, American industrial output was also weak in April, and data for business inventories in March showed a rise 5% higher than in March 2018. None of this paints a picture of an economic drive with momentum. In Canada, they released April CPI data overnight, which is inflation rising to 2%. There was also house sales data out for April, and that came in surprisingly strong. Volumes were up more than 4% year on year, although prices were little changed on an annual basis. Unlike the rest of the country, however, Vancouver is doing it tough. In China, updated data for April shows that their economy was also losing some momentum even before the latest hike in tariffs by the Americans. Data for industrial production, retail sales and fixed asset formation all came in substantially lower in April than March, and all well below expectations. Those retail sales are actually a 16-year low. Yesterday, the Shanghai equity market had a very good day, up 1.9% as the home team came out in support and clearly bolstered by others. Hong Kong was also higher, up 0.6%, with Tokyo up 0.5%. Overnight, European equity markets were up solidly as well, and this morning Wall Street is chiming with own solid gains, with the S&P 500 up its own 0.7% in afternoon trade. The Wall Street rise may be because Bloomberg is reporting that the US administration will delay a decision by up to 6 months to impose car tariffs to avoid blowing up negotiations with the EU and Japan as they struggle to get leverage in their fight with China. In Australia, new analysis has uncovered a 2019 budget tax feature that may help explain why the RBA resists cutting their official interest rate benchmark. Already in place, the tax cut will apply to 10 million Aussies from July, with almost half of them getting more than $1,000 back as soon as they lodge their 2018-19 tax return. A slightly larger group will get back somewhere between $250 and $1,000. All this adds up to a tax stimulus of over $7.5 billion, and it's said to be worth 0.5% in rate cuts. The RBA will hold off to see what this fiscal stimulation does before it acts with its monetary stimulus of its own. US Treasury 10-year yield is sinking now at 2.38%, and that's 4 basis points lower than yesterday, taking this key benchmark back to levels we last saw in 2017. Gold is little changed, up $1 at $1,296 an ounce. US oil prices are higher today, just over $62 a barrel, while the Brent benchmark is just on $72 a barrel. And the Kiwi dollar is marginally softer today at 65.6 US cents. On the cross rates, we're unchanged at 94.7 Aussie cents, and against the euro, we're still at 58.6 euro cents. That puts the TWI little changed at 70.5. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.